Our next segment is Funding the Future, Prioritizing Diversity in Investing. Business owners struggle, of course, with access to funding. The amount of people of color on angel groups, VCs, are marginal at best. I think it's 2 or 3%. And the amount of investment dollars getting to people of color is in the very, very low single digits as well. I've heard numbers as low as 1% for Black entrepreneurs, and this is dismal. And I think it points to the data is totally in line with what everything Caroline was just talking about. So today we welcome Patrice Milos, of the Executive Director of Cherrystone Angel Group, Betty Francisco, the General Counsel of Compass Capital Partners. She's also with Pipeline Angels and the Amplify Latinx, and Deb Kemper, the Managing Director of Golden Seeds Angel Group. This will be a conversation moderated by our own friend and colleague, Christian Appia, from the Roxbury Innovation Center and District Hall, Boston. And so I want to welcome Christian Appia, and also I wanted him to share just a minute about one of his programs that he's been doing in Boston and how we're looking to explore to kind of bring that throughout the region. Thanks for joining us, Christian.
Yeah, I just wanted to say before I go into anything, the previous conversation was really just great to listen to. I'm really thankful for, like you were saying, the candor, just everyone speaking the truth, because I think you can't really move forward without addressing what is. So thank you guys. I'm really just thankful to have an opportunity to moderate the panel. But to speak to what Avi was speaking on, just the programs that we're working on at Roxbury Innovation Center, I think we have been working on some, what I hope to be impactful programs for the community. We've really tried to not only sit in the spaces that we're in and come up with programs that really have a dialogue with individuals in the Roxbury community, the greater Boston community. So one of those programs for us we're really excited about is the Microloan Program. So we're looking to help connect early stage entrepreneurs to some initial funding so that they can really get their business off the ground. I think that's something that we've seen even in the last discussion, that, well, where is the opportunity? Where is the grants? Where is the funding? Where is the support? And like for us, that program really fits into a larger idea of creating a pathway to successful, scalable, and sustainable businesses. So anyone that comes into the office with an idea, they can start and say, hey, this is what I want to do. And then we can help guide them from, okay, idea to business plan, MVP. Let's put your pitch deck together. Let's see if we can connect you with some funding. What do financial projections look like for you? And what does mentorship look like for you? So giving people tangible steps and empowering them, because one thing I always say is we don't have the solutions. We find the solutions alongside the people that we work with and work for. So thank you, Avi, for giving me an opportunity to really just talk briefly about what's happening, what we're trying to do, because it's always an evolving thing at the Roxbury Innovation Center. Yeah. So I would like to definitely get to the panel and address everyone in the panel. I know Avi spoke a little bit about everyone's background. I just wanted to give Betty Francisco, Patrice Milos, and Deb Kemper just an opportunity for you guys to speak yourselves, briefly introduce yourselves before we get into some of the questions we had planned for today. Yeah, Betty, if you could go first.
Just introduction?
Yeah, just brief introduction.
Well, thank you for having me, and thanks. I missed the earlier session, but I heard the tail end of your conversation, and you were getting pretty deep there in terms of, the impact on race and racism, and how just our investing landscape, right, needs to dramatically change. So I appreciate that you're hosting these conversations, and I think there needs to be many more to transform our investing space. But I'm Betty Francisco. I'm a lawyer by training, a corporate lawyer. I'm currently general counsel at a nonprofit called Compass Working Capital, and we provide financial coaching and wealth building savings programs for families with low incomes. Passionate about that work because 90% of our clients are women. and women of color. And so the impact that we can make on helping them build savings through a housing program that allows them to save using rent payments can dramatically change the trajectory in life. That's sort of my day work. And then I'm also co-founder of Amplify Latinx, which is a movement to build Latino power, economic and political power in the Commonwealth of Massachusetts. One of the programs that we've been focused on this particular year, especially with COVID, is supporting our Latino small business community. Done a lot of work with helping them access capital right now, especially the PPP loans. And as many of you know, right, those loans did not reach or were just not the right kinds of financial products for many of our small businesses, especially businesses of color. And then I'm also an angel investor. I invest through Pipeline Angels, Astia, Portfolio, and I only invest in women entrepreneurs and entrepreneurs of color. That was a commitment that I made when I started angel investing, only because I know, as having been an entrepreneur, how difficult it is to raise capital, to be in pitch rooms, to be a woman of color. And even with my privilege and knowledge and expertise, it's hard. So imagine someone that's never raised capital before or is new to being an entrepreneur, how challenging it is to sit in a room, with investors and be able to pitch successfully and deal with the biases that are there. So sorry for the long introduction, but I'm looking forward to the conversation.
Thank you. That was awesome. So I just wanted to give space to Patrice, if you want to just briefly introduce yourself.
Sure. I'm Patrice Milos, and I come to this as a newbie in the investment space. I joined the Cherrystone Angel Group about 2 months ago as their new executive director. Having spent my career in life sciences, big company, entrepreneur, small company, 2 founding CEO roles. And I have always been a passionate diversity champion, primarily for women in leadership in life sciences, because it really has been an area where we have needed to do better. I think that in over the past 2 months, I think we all have stepped back and thought a little bit about our white privilege. I mean, it is really true. I come from a background of not much, but I've been able to play the game. I've been able to raise money. But I know that entrepreneurs of color, Black, brown, are tremendously disadvantaged in really reaching the community that they need to achieve their funding. And even in playing leadership roles across our industries. So I've really taken this on, and I think Mia joined you earlier. I wear a dual hat as a fellow with the Venture Mentoring Services program, where we have initiated an understanding of diversity, or actually a listening on diversity, where we don't know what the challenges are. I think we as white entrepreneurs, white funders, think we do, but we need to listen better. We need to hear what our colleagues of color are really challenged by, and really help understand how we can embrace them as entrepreneurs through mentorship, participation in the venture mentoring services, and help them along the funding path as well. So Cherrystone Angel Group, which I'm now the executive director, is embarking on a strategic planning session to really look hard at who we are and who we fund. And I am proud to say that we funded over 26 companies, many female CEOs, 1 Black CEO, and 1 of Asian descent. So, we're trying, but I know we can do better. So that's, I think, a start.
Awesome. Thank you so much for sharing. And then Deb, if you could give us a little bit as well, just about your background and what brings you today.
Can everybody hear me okay? Because I got disconnected earlier. So you guys can hear me? Thumbs up? Okay, awesome. Thanks. And first I want to thank the prior panel. I'm so glad I was able to listen to that. You guys gave me a lot of really good food for thought on this as we continue to go. So I'm Deb Kemper. I'm a active angel investor based out of Boston, but also splitting time. Our primary residence is in Rhode Island. So I'm down in Westerly to Mia, wherever you are. You know, Golden Seeds, I'll talk more. So I became an angel investor after we moved to Boston 7 years ago. So I still consider myself a newbie in New England. But we lived overseas. We lived in China. We lived in South America, and prior to that, California. But I am originally from Connecticut and New England area. Became an active angel investor because I've been mentoring founders, and we decided to try and figure out a way as we were investing to actually, or not as investing, as I was mentoring founders, of actually putting our money where our mouth is, and actually started investing in the companies where I was mentoring founders. Joined Golden Seeds, which is, for folks that don't know, we're a national angel group, over 300 active members, 8 chapters now throughout the U.S., invested over $100 million in over 150 companies. What's interesting from the conversation earlier is we are focused more on seed stage and Series A for the fund, which I'm now a part of. And to me, part of the conversation I really like to maybe we focus on this hour is this, hearing the stories about the friends and family rounds. And I think we're getting more aware of the challenges. We expect folks to have had a certain amount of traction. I think Caroline mentioned that. And how do we actually, think through that, and how to help get more mentoring and or earlier stage funding to founders of color. We have a pretty good track record, I would say. 9% of the prior funds founders were women of color, but we know we can do better, and we're not happy with the pipeline that we see, and we know we have to be figuring out how to do more. And so appreciate everyone's comments so far.
Awesome, thank you. And I think that's a perfect segue into really the first question I have for the panel. And when we talk about like how the funds are operated, one thing that I would love to just ask everyone on the panel is describing like where the investment comes from, right? And how the decisions are made. And then even so much as say who makes those final decisions about who gets the funds, right? Because we see a disconnect between, even if we're just listening to the last panel, people talking about there's this gap, right? And how do we bridge that gap? So just so I reiterate the question, where does the investment come from? How are those decisions made? And then who makes the final decision on who gets funded? And I can start with you, Deb, if you'd like.
Sure, yeah, because I wear both hats, right, in a lot of ways. So there's two categories. There's the angel groups, right, which Patrice and Betty are also a part of, where entrepreneurs are coming forward and pitching, but individuals in the end are writing checks. So you're having to sell multiple people. And that's different from a fund where I'm investing. Other people have given me their money to invest. And so there's a different, what's called duty of care and fiduciary responsibility. The process can seem the same, right? You're trying to look at the value proposition, you're getting to know the founders, but it's that decision making where, as an individual, I can choose to invest or not, if I can meet the minimum, that the company is asking for. As a fund, I've got a certain investment thesis I'm working towards, whether it's a sector focus, a stage focus of a company that I'm working towards. And I'll let Betty and Patrice add on to what I've started laying out.
Yeah, so I mean, for me, because I'm a part of a couple of different groups. So with Pipeline Angels, those are individual investors, and in Pipeline, the way it's structured, it's actually a boot camp. It starts as a boot camp focused on creating more capital for women entrepreneurs and non-binary femmes, but it's women investors, right? So over time, Pipeline has generated more than 400 women angel investors, invested over $6 million in, I think, over 70 companies. And these are all women-owned social ventures. And many of them are owned by women of color. And Pipeline, I forget the exact numbers in terms of diversity within Pipeline Angels, but I think over 25% are Black women and Latinas, similar numbers. So very different diversity numbers from when you look at angels, you know, as a whole, as an entire group. And so it's individual investments, and because it's done through the program, there are different entrepreneurs that come and pitch, and the cohort of investors select those entrepreneurs. But you know, it's that the pitchers are typically diverse founders, and the angels are also, you know, all women and diverse. And I have to tell you that having been in pitch rooms when entrepreneurs are pitching to pipeline angels, it's one of the most, I have to say, happy, inclusive experiences. They actually are really, like, it's really fun to be in the room because it's so supportive. Anyway, but what Pipeline is doing is really, you know, it's trying to create that kind of capital, what we call the friends and family capital, right, for entrepreneurs that typically may not, it's super early stage entrepreneurs that don't typically have that access, right? And so it's smaller investments. It's a minimum of 5,000 and per angel, and sometimes angels opt to put in more. And what I'm seeing right now is that there are many of the Pipeline Angels portfolio companies are in first and second follow-on investments. Many of them get additional capital from the existing investors, but also we've got enough angel investors that it's now a group, right? And we can all invest into these different companies that maybe didn't originally pitch to us, but are now available. So it creates, there's a deal flow now that's being created. I also invest through, I'm on the investment committee of Boston Impact Initiative, and that is actually a fund in Boston, and that is focused on funding you know, on entrepreneurs of color, but also ventures that support workers or communities of color. And we have an investment committee that I sit on. We, you know, every month hear pitches from entrepreneurs. They're vetted by the staff, but the portfolio itself is extremely diverse. And you know, we call it integrated capital. One of the tenets is that we're also trying to make sure that the companies we're supporting are able to support their communities, right? So we look at things like wages, right? How diverse is their leadership team? How eco-friendly are they, right? So these are all ventures that in the end should have a social impact in their communities. And I can keep talking about others, like Portfolio is another one. It's, you know, those are what we call learning funds. And there's a fund called Rising America that Portfolio has, which is diverse investors on the investment committee, but focused on investing in diverse founders as well.
You go ahead, Patrice.
Great. So Cherrystone Angel Group, again, located here in Providence, is an early stage investor, but not really the pre-seed. It's really a seed, late seed to maybe early Series A for our initial portfolio investment. So companies come to us from a variety of primarily New England area, Boston, Cambridge. We've built some nice relationships with Connecticut, some New York, a Toronto company. And they come to us when they're close to being ready to go to the market or go to the clinic. So they have a product, they've identified the market, and they'll come and they'll pitch to us, a small group of Cherrystone members. Our membership ranges between 55 to 70 members. And that changes every year depending on people's interests. And we typically have a small group of, 5 or 6 of us that will do that initial screening, is what we call it, of the venture. We've looked at it before the screening meeting. We've talked to the entrepreneur typically. We use the GUST platform, which is a platform that many entrepreneurs use to just enter their venture. It's a great tool for early stage entrepreneurs. We review that also every day. And then they'll spend 10, 15 minutes really talking to the screening committee. And then we'll make a decision whether the market need is well identified, they have a product, They have a good team, and they seem to have an exciting innovation that will make a difference. And if it is, then we'll take it to our members, and our members meet once a month. And the company will review with the members. You know, there may be 40 members at a meeting, on a Zoom call now, and they'll present and have a discussion with the members. And if the members are interested, we'll then make a decision to go to due diligence. Sorry. Where a small team of members who themselves are very experienced in business, entrepreneurship, legal, marketing, and really work through with the CEO the details of the company, and make a decision as to whether this is something we could recommend to the members for investment. And if we do, then the members have the opportunity to participate in the funding round that the CEO and their team has made the decision. And it's an open call for members. You can contribute 5,000, you can contribute 50,000. And together we put together a round that will go to the company for their series of, whether it's a late stage or Series A, along typically with other investors. We're not a sole investor. We like to partner with other angel groups, other diversity investors, I think, are something we'd be looking for, and other groups to really help the company advance their goals. So that's kind of an overview of our process. Right now, we have about 15 portfolio companies. And what's important is once they're in the portfolio, we'd like to help them be successful. So, we just finished another late stage seed round for one company that we're very excited about. We had already invested in it. They came back a year later. We decided they were really meeting their milestones and provided them more capital. So it doesn't really stop at just a one-stage investment. I mean, we've invested, gosh, over $25 million in companies over the last several years. And we'll continue to do that, and look forward to innovative, great opportunities.
Awesome. Thank you so much for everyone for those responses. So I kind of wanted to segue in and address the climate. And first, I'll talk about COVID-19 and just the pandemic that we're facing, because I know it's changed how we engage, like even this event itself. I mean, we're all virtually, tuned in. So I wanted to ask, in this space now, has this really affected this early onboarding process of connecting initially with people that, or businesses or individuals that you think about funding? How has COVID-19 changed that interaction? Has there been any positives that come out of it, or just new things that you have to deal with or contend with? And I'll definitely start, let's start with Deb.
Okay, great. Yeah, it's interesting. I was just gonna, when I was hearing some of the conversations, speak about that. And I think there's also a question that came in. We were already using Zoom to be able to bring people in. Given where our locations are, we were finding it was hard, as we have more, we have a lot of members who hold a daytime job, right, and are doing this, they're investing on the side. So we were already using technology and on a regional basis. And what we found is we're now doing it at a much higher level at a national basis. And we're getting really good attendance at events. We're able to do more to loop in our CEOs and our portfolio companies into some of the conversations that we have. We do trainings for our members every month. And so it's actually just, I'd say we turbocharged it, and we're really thinking about how to continue that in this environment. And folks, given our national nature, we've always been comfortable writing checks without having to be in the room with the entrepreneur. I think sometimes you'd hear, well, I have to meet the founder face to face. I think in an angel network, you have to trust your peers. So I have to trust my peers on the West Coast that, that they've met with the founders, and seeing them on a video is sufficient. I think that's been an excuse in some ways for people for a long time. I'll put it in the chat, but we also have always done office hours. We do a monthly office hours in all of our regions. And we had started doing some of that virtually prior as well, just given, again, some of the commutes that were getting ridiculous. We found it easier all around for founders and for investors to be doing that virtually. And I'll put that into the chat because those are open to anyone can sign up, and you get an overview of the funding process, what's angel versus seed versus someone had mentioned debt financing and non-dilutive. And then you do get one-on-one time with an investor. So some of that mentorship that people were talking about before. And there's no charge for the office hours. So, you know, that's something that we've defined that we're turbocharging what we were already doing. We are missing the in-person. I mean, there is something about getting together in person, but we're making it work right now. And I think if anything, it's making it easier for entrepreneurs to access us. Our office hours have all been oversubscribed because it's making it easier for people to access and not have to, especially when we think about you're not having to leave your day job to come spend half a day getting to our events. You can do it for the hour that you need to.
Awesome, thank you for that. And I just wanted to open that up also to the other members of the panel. Betty, if you had anything to add.
Yeah, I mean, I'd agree with Deb that the online format actually creates more access, I feel. So, you know, again, with, I mean, at least, you know, there are some pitches that were already being done virtual, like Portfolio was doing that virtually anyway. There are some pipeline pitches that were being done virtually as well. So there's had pre-COVID, there had been a move towards doing more online virtually with a Zoom-like platform. And so now that we're sort of forced, you know, to do it and at scale, it's actually worked out quite well. And I think, you know, when we think about how a pivot like that, you know, could create greater or lesser access, I think it overall is creating more access and opportunity to reach, you know, more entrepreneurs and for them to be on to pitch. It's also forced us to be quicker, right? So like you know, pitches may be a little bit shorter because it's online. There's just not as much attention span when you're on a Zoom all day. So it creates, you know, an environment that you've just got to be a little bit faster. The only thing that I think is a downside to this is that the relationship building that may have happened in person, right? There's sort of, you know, always the physical aspect of being able to meet with somebody, to break bread, to have coffee, like that's not possible right now. And I think that's, you know, finding ways to continue relationship building in this kind of environment is a good challenge to have. But I think that's where, you know, we just need to be focused and pay attention that we don't lose those opportunities to really do deep relationship building in a virtual environment.
Yeah, and Christian, I'll add too, you know, Cherrystone Angel Group is a very local group of people, and they really enjoy the social aspect of the engagement traditionally, you know, so member meetings once a month, 2 hours, and then that's usually followed by most of the people joining each other for a very social dinner. And really, so it's as social as it is entrepreneurship and innovator investor. So I think the group misses that. Coming in as a new executive director in the middle of it, I don't have all that history except as a pitcher to them. But I think that for me, I've been able to see so much in the New England area because so many of the events of innovation are online now. So it really opens it up to view what's happening in New York, what's happening in the engine in Boston, what's happening in Connecticut Innovations. So it's allowed us to see a lot of companies very quickly over the last 2 months and bring those companies forward. In a Zoom format, it's a little bit less personal, but it works well, and members are participating. More members are participating because I think it's easier. And, you know, we'll see ultimately how we come out of this in the end. We have a big summer meeting next week, which is traditionally in person. We have a guest speaker, we have CEO panel. we'll see how it goes. But I think it makes it easy for the CEOs because they just join on for the call rather than having to come from Toronto or wherever they're from. So I think it's worked okay, but we really do miss the people interaction for sure.
So I want to add something to this, which is for the founders, you know, and folks in the room. Like, we're talking about this with our founders of they're having to sell remotely now, right? There aren't big conferences that they go to anymore. There aren't those networking events, and we're in this, you know, I think Tuni said the new normal. I'm not sure we're there yet. We're still in transition, but you know, I think it's important to realize things may not get back to normal for a while. And so, you know, investors have to figure out how to shift, but I think also we're looking at that with founders, right? If founders have to be able to communicate with us and connect with us and us with them, they're also having to do that with their customers and their clients. You know, and this is something totally new. No one's done this at this scale before. And I think we're all learning. You know, we're all learning in this new world. And I agree with Betty. I think it helps equalize a little bit, you know, provide more opportunity for access.
Oh yeah, thank you guys. I mean, all those comments were really show just how much things have been changing and how fast they're changing. And I think that was a perfect, even a segue to this question because, and I'll take a quick minute. So I was on a phone call with my mother yesterday, and we were just talking about generally what's going on in the country, but also in the world. And she was telling me that she's like, remember these past few months, because 30 years from now, this is going to be in your history books. Like, kids will be taking social studies class, and the 2020s will be a dreaded year for all the things that they have to remember to answer on that test or exam. But that's to say that things will never be the same, regardless of what happens with the pandemic and even with the social justice movements we have in this country. And so for me, that leads me to this question. Really, we're looking at not only the pandemic, but also a huge awareness, cultural and even national awareness on Black Lives Matter movement, which has been around years before this. But I think when you add a pandemic and you add record unemployment and you add a lot of these other things that cause this thing to come to a boiling point, these are a lot of conversations that are happening at once. So I would like to know just the conversations that are now happening with the decision makers, with your funds. How has this current social climate affected, or has it really affected how you look for startups? I know some people have already answered like, okay, we're now looking to make more deliberate looks at businesses of Black-owned businesses, women founders and CEOs. You're looking to make investments, but how has this social movement changed how you really look for those people and how you speak to them now that we're looking at this new normal?
I can start with that. Yeah, I can start. You know, I think we're definitely looking at it, right? We're trying to understand, you know, where are we sourcing deals, right? And where are we missing, right? Because we tend to go to the same network. So it's alumni networks, it's through job connections. And, you know, we talked about this in the prep call, right? You know, our networks are primarily white. Like, my own networks are primarily white. When I look at where I went to school, sports I did, right? My MBA program. And so I'm having to really do a lot of self-reflection of how do I put myself out there into different places, right? To be finding founders who look different from me. There's another piece though, in that, are we investing in those founders when we do find them? And if not, why not? And I think it goes back to those same questions. I'm thinking about Juan's comment, right? He's a successful entrepreneur, hasn't gone to college, right? So there's no way he would potentially be in my network. And I've got to rethink that and how we look at, you know, a team and what makes a team possibly successful. I think in my industry and venture, we look a lot at pedigree, and that doesn't necessarily mean success, right? And so we have to reevaluate that, and we're having those conversations of, you know, let's talk about I think I put something earlier on, what's the value proposition? And then, you know, how do we have the right resources around it versus just presuming someone's going to be successful because of where they went to school? And so those are some of the conversations, we've been having on it. I hope that answers your question, Christian.
Yeah, no, thank you for addressing that. And I have a follow-up question, but I think it applies to everyone in the panel. So if anyone else wanted to hop on and answer that question, just about has the Black Lives Matter movement and just the highlighted social awareness changed how you find these businesses and funders and founders, or has it really just cemented what your process is?
So from my perspective, Christian, it is so fundamentally important to change the way we think. And it's really solidified that for me. We haven't done a good job for our Black and brown entrepreneurs. And that's why I'm so promoting the venture mentoring service, because we want to help, the early stage Black and brown entrepreneur. I remember a pitch competition that Venture Cafe had last year. And there was an amazing entrepreneur, and I can't remember the name of his company, a Black individual who brought his son, and he had developed sports gear for head and for concussion injuries for basketball and soccer players. And I just was so struck by this gentleman had no preparation to understand what he was doing. And he was so proud and he was so good. And it was really just amazing. And we want to help those people. And we want those people to be ready to be able to get to that, second seed stage for them to come to Cherrystone. And we know we all have to invest in those individuals because they have ideas. Their ideas are different than many of ours. And we need to be ready and open for that. So, it's changed me totally.
Yeah, I guess.
Go ahead, Betty.
I would say, I've been doing it. So it hasn't changed anything for me other than, I think to make me even more of a fierce advocate for this, right? And excuse me, not just, am I investing in diverse founders, but we also need to focus on the investor ecosystem, right? So I'll mention a new initiative called the Investors of Color Network, and I'll share the link in the chat, but it's a group that's forming now of diverse angels and VCs, so Black, brown investors, and we're trying to create our own ecosystem, right? So even as we talk about investing in diverse founders and diverse entrepreneurs, we must also build the ecosystem of investors. So we literally have to begin shifting capital and wealth, right? So that we could create more of it by helping investors, right, build up their portfolios. And maybe you don't know, there's equal bias on that side, right? So emerging managers or emerging investors have an extremely difficult time raising funds for funds, but also being taken seriously, right? So when you're an emerging manager, the amount of money that you need to just prove that you can, even be qualified, right, to start a fund, you have to have a track record, all the biases that come along with, your experience, where you went to school, your pedigree, the things Deb mentioned, are even more exacerbated on the investor side. And so that's something that this ecosystem needs to tackle as well, right? And that's where I've also started to shift in that, if I'm going to be an investor of color, what do I need to learn? Because you always have to be better, right? You always have to prove yourself and be 3 times as good as your white investor or white founder in order to be taken seriously. And that will be there for a while, until we really start to shift systems and deal with the systemic racism that exists. So I would say that, for me personally, not a lot has changed, but I think for all, other funds, it's really important to begin aligning with investors of color, with programs that focus on entrepreneurs of color. Like here in Massachusetts, there's E4All, right? And we think of E4All, the program is run in Spanish and in some communities, and it's typically been, it's super early stage, it's idea stage, right? So they help you seed an idea, and you don't typically see what we call investable companies, right? They might be a cleaning company, it might be a childcare center, And I recently had the chance to meet these two entrepreneurs. They developed an app to go like head-to-head competition with Grubhub, Uber Eats, right? The stuff in the restaurant space. They don't have any training. I think two of them have not even finished college, but they have amazing coding and design skills. And that is what we need, to find. And they are gems, diamonds in the rough, right? That if we actually look, they're everywhere, because our communities of color will be a majority in the next 10 years. And that is the next talent base. That is where innovation is happening. We're just not looking. And so we've got to intentionally put ourselves in those spaces. Even someone like me, like really going out and finding how are they addressing the current problems that we see were there pre-COVID, but are even more exacerbated today. And they're solving these problems, right? With technology, we're just not looking for it. So anyway, that's where I'll leave you, because I think that it's not just creating partnerships and networks. We just have to, I think, transform the ecosystem to work incredibly collaboratively, including in how we invest, right? Syndicate, and forge connections even amongst ourselves, so we could do that better.
Yeah.
And Christian, if I can I follow on to her for?
Yeah, absolutely.
And I think, Betty, you're hitting on something really important, which is there are some structural challenges that have to be addressed, right? So I'm working with a group of alums out of my alma mater that are founders and funders to help open and increase transparency in this, because it is hard for underrepresented fund managers to get the funding and unlock this institutional capital, which is what we really need. I was going to make a comment about, mentorship, and I think we do also have to unlock that mentorship. It kind of, something struck me, and I apologize, I forget who made the comment about they got a prize, but 40,000 was professional services. And I'm thinking that's mentorship, right? That's a lot of, that should be going, and not necessarily be, we have to get more of that funneled to underrepresented founders, but we also have to get that capital at the top side, because a lot of people are willing to give advice, but we really need money to be flowing to underrepresented founders. And that's what this task force I'm part of, is trying to figure that out and how to unlock that. Because that's really the structural piece that we have to fix in this and make it not a trend that we're talking about, I think, as someone said earlier.
Yeah. And Deb, just to that, when we say mentorship, I think it's really clear, like, what does that mean? Is that just, okay, we're going to give you advice, we're going to help you with the financials and your pitch? In the end, everybody needs relationships that get you customers, help you generate revenue. And that is where, I'm not so sure that always the mentorship is doing what maybe it's intended to do. And so I just encourage everyone too to, when I think of mentorship, I think of opening doors. I think of who's going to help you get the next customer that's going to take you right to your next milestone. And I'm not, it's not that
I agree 100%. It's a bit of the sponsorship.
Right.
Yeah, it's about the sponsorship, right, versus the mentorship. That's a great point.
Yeah, and I just wanted to hop in because I think, Betty, you said something that I think really resonated. Because when we talk about it's almost like it's a dual-sided market, right? We have to look at the entrepreneurs, the founders, and the people working, and then the investors is like the other side of this market. And how do we connect them? How do they interact? And one thing that we've really noticed in speaking to the community in Roxbury is that intentionally supporting entrepreneurs and founders in the community isn't just helping them, but it's also a form of economic development. It's a form of community development and opportunity for growth, for jobs to pop in those communities, for pride to hop in those communities. And something that we've noticed is that helping the entrepreneurs that come into that space prepare for the opportunity to pitch and speak. Like you're saying, how can we open those doors? How can we get those entrepreneurs prepared and then in front of those opportunities, right? And those opportunities could be people, like we do a pitch competition where they could be people on a judge panel. And we make and invest a lot of time in prepping and preparing the entrepreneurs who are selected to pitch to be able to communicate their ideas effectively, to feel confident when they're up there and doing that. So that way we can create this pipeline, right? This opportunity, this pathway to increased opportunity, increased funding, where people aren't talking about $5,000, $2,000, $1,000. They're talking about $90,000. They're talking about $250,000. And that's something that we think, when I say we, I'm talking about Roxbury Innovation Center, but I'm sure just most funders and VCs thinking about how we really intentionally create those opportunities for people. And that's just a quick question that I have, and even in hearing you guys talk, is what focus do you guys have on social impact businesses, right? And I know, Betty, you've spoken at length about it, but I wanted to hear, like, Deb and Patrice, like, what kind of social impact businesses have you encountered, and how do you go about, do you evaluate those businesses differently, or is it still very much the same process that you guys have for just traditional startups?
So what I would say, Christian, is Cherrystone Angel Group. Perhaps I'm too early in the role to understand social impact investment from their perspective. So I know we would look at it, but it also has to come with a path towards really building a strong revenue business. And so I think there's a dichotomy there that I just don't know enough about from Cherrystone.
From Golden Seeds, I mean, we were started to get funding to female founders. If I may not have said that early on. And we do have male allies. 20% of our membership is actually male going into that. So that's our kind of our writ large social impact. Within that, it really comes down to individual members, but something for folks to keep in mind, and we haven't addressed this here, it came through one of the chats of, we are equity investors, so we're looking for a return on that equity over time. And I think it comes down to what's the timeline for that in terms of how long people will wait to get that return. That being said, I do tend to, I think, again, this is all very individual. So this is now me speaking as Deb, as an investor. I look at job creation. One of my early investments is a quick turn manufacturing facility up in Lawrence, right? 150, employees at that facility, really growing, really having an effect on unemployment in Lawrence, and paying a living wage, what they're trying to do up there, and how that founder has kept that facility going through COVID and retooled. And I think it really depends, social impact varies. Some of mine are in, clean tech, et cetera, but these are investments, and it's different than philanthropy. And I know other folks take a different view on that, but and I think that's where some of the debt financing probably sometimes tends to be a little bit better towards social impact financing if folks aren't going the equity route. I may have overcomplicated that, but
no worries. I think everyone's comments have been super insightful. Betty, did you want to hop in?
Yeah, no, I think, social impact can be really different for different people, right? So even, at Pipeline Angels, the term is very, very broad, right? So it could be a company that, and I agree, like Patrice, like these companies must have a pathway, right, to financial sustainability and to revenue growth. But when you look at, what do they do ultimately? Do they have an impact on a societal problem? Are they trying to address a societal issue, right? So it could be my very first pipeline investment was in a company called VidCode, which is a platform to help teen girls learn to code. And what's the social problem they're addressing, right? It's the lack of diversity and women in tech. So it's, and it's a for-profit, but we often think of social impact as, oh, it's philanthropy, or it's, it needs charity. These can be very successful, revenue generating companies that still address a fundamental social issue.
I agree. I think that's really important, because I think we want to be investing in companies that can really make a difference.
Right.
Whether it be, synthesis of a natural product at a scalable route that's better, Alzheimer's disease therapeutics. You really just want to be making a difference for needs that exist in the community.
Yeah, and I think I noticed in the chat Juan brought up PRI, or program-related investments, and I think that is a financing channel that is starting to grow to help with some of this, where it may not provide traditional venture capital returns, but still provides a very attractive return, especially with PRI type funds. And I think we're seeing folks try to get more creative in that and accessing those dollars.
Just to kind of wrap up in a bow, is thinking about how, yes, there are businesses that their primary intention is to generate revenue for themselves, but there is a double bottom line that we can kind of consider when looking at the impact, not only for their own financial futures. When I say their own, I'm talking about the business, but also the outlook of the community. Like, what would the community look like if there was a center where young African-American women could go and learn how to code? Right? What would that do to the STEM programs in the community? What would that do in 10 years from now? What does the hiring pool look like in those fields? And how does that address even larger issues, right? Of equity, of accessibility, of who is in the room to make those decisions? So I do think that when we talk about social impact, like you guys were saying, that is something that is so vital. And it's great because as funders, and really just the access to resources that you guys have, you can share those with businesses who can then go and have this real impact in the community. So I think this is something that is a conversation that needs to continue to move forward. I think a great example of a business that we worked with in Roxbury is Coils to Locks. And they were, it's women-owned, Black women-owned business, where they provide Afrocentric wigs to individuals who are suffering and fighting through chemotherapy treatments, right? So this is something that on the front end, it's like, okay, this is it's just a really thoughtful, like heartwarming business idea. But then you think about just the social impact of that, right? Like, well, the problem before, there's this huge gap, right? There's this disconnect, a cultural disconnect. We're not solving this problem. So I think really just not to speak any more to the issue, I think you guys covered really beautifully. It's really important, and I'm glad that we have this opportunity to have this discussion today.
I'd like to make one last comment, because I think what Christian said was really good. The one thing about an angel group, and the three of us really represent different opportunities to invest in different businesses. Once you invest in those businesses and you have a board seat, you also have an opportunity to bring that culture of diversity and inclusion to that company as well. So I think that's one thing I'm going to take home from this, is it doesn't really stop with just who we invest in at the time, but in the companies we invest in, can we help them think about diversity and inclusion as well? So thank you for that.
Yeah, and it's I think across the entire spectrum, right? So it's the board, it's their leadership team, it's the staff, it's looking at wages, how they're creating jobs, right? It's there's so much that if we want to actually transform the ecosystem and the companies and help them, right, become better corporate citizens, there's so much that can be done. And I think this is where, like Christian, the next evolution of these conversations, right, is it's not just about dealing with bias and race, the racism part. It's now, how do we create structural change, right? And I think that's the hard part, because you're talking about dismantling history and how do you do that? And I don't think any one person or group can do it alone. It's a collective effort. And I think I'm looking forward to it. I think this time that we're in has created this amazing opportunity to be transformative.
Absolutely. I mean, thank you, everyone, Betty, Deb, and Patrice, for participating in this panel. Like you were saying, Betty, this is an incredible opportunity. We're at a really powerful time in history where the mirror is pointed right back at us. So we have an opportunity to look at ourselves and fix some things that I think once we decide to say, okay, this is a system that doesn't serve everyone. This is a system that's exclusive or excludes rather. We can decide intentionally to say, okay, we don't need to operate in this way anymore. And we can look at different ways of sharing resources, different ways of empowering communities. So I think, like you're saying, this conversation is just the beginning.